Hi students, today we can discuss the remaining problems in marginal costing. So this is problem 6. Sales fixed cost, variable cost is given and they are asked to calculate the break-even point. So I am just skipping this problem because it is very easy to calculate break-even sales because you know the equation is fixed cost divided by PV ratio and you know how to calculate PV ratio. PV ratio can be calculated by contribution divided by sales, and here for calculating contribution, sales and variable cost is given. So it is very easy to calculate PV ratio and fixed cost is given in the question itself. So I am not spending too much time on this particular problem. We can just directly move to the second one. This is problem 7. So from the following details, find out, I think, 5 things you have to calculate. First one, PV ratio, then break-even point, then margin of safety, thereafter profit when sales are 2,50,000, then sales to earn a profit of 50,000. So the following details are given. Sales is 2 lakh, total cost 1,60,000, fixed cost 40,000, net profit 40,000. So let us see how we can calculate PV ratio. So PV ratio is equal to contribution divided by sales into 100. So here contribution, how you can calculate? Contribution will be sales minus variable cost. So if you are look at the problem, uh, you can note that point. The variable cost is not given directly, but you have total cost and fixed cost. So if you know the equation of total cost, that means fixed cost plus variable cost is equal to total cost. So it is easy to find what is the variable cost amount. So total cost is how much? 1,60,000. Then fixed cost is 40,000. So the balance amount is variable cost. So variable cost comes to 1,20,000. Contribution sales minus variable cost. 2 lakh is the sales and 1,20,000 is the variable cost. So contribution is 80,000. Now we can calculate PV ratio. Contribution divided by sales. 80,000 divided by 2 lakh into 100. So it will give answer 40 percentage. So that is the answer for first question. PV ratio is 40 percentage PV ratio. The next one, break-even point. How you can calculate break-even point? You have different equations, but now here we can use this equation because we know what is the PV ratio. Fixed cost divided by PV ratio. That is, fixed cost is given in the question itself, that is 40,000, and PV ratio, just now we found what is the PV ratio, 40 divided by 100. So the answer is 40,000 into 100 divided by 40 is equal to 1 lakh. So break-even point is 1 lakh. Then how you can calculate margin of safety? Total sales minus break-even sales. That is total sales 2 lakh, break-even sales 1 lakh. So the answer will be 1 lakh. The next, profit when sales are 2,50,000. What will be the profit earned by company if our sales is 2,50,000? That means Now we have only 2 lakh rupees sales. So what will be our profit when we have a sales of 2 lakh 50,000? So here, how we can calculate profit? Contribution minus fixed expenses will give answer for this profit. So how we can calculate contribution? Sales into PV ratio will give answer for contribution. So what is sales? 2 lakh 50, because we are asked to assume 2 lakh 50 as our sales. 2 lakh 50 into 40 divided by 100. So it will give us answer 1 lakh. So contribution is 1 lakh. What is the fixed expenses? That is 40,000. 1 lakh minus 40,000 is equal to 60,000 will be the profit when sales are 2 lakh 50,000. The next question, sales to earn a profit of 50,000. If we want to earn a profit of 50,000, how much we have to sell or what should be the sales level? So how we can calculate? Fixed cost plus desired profit divided by PV ratio. Here fixed cost we know. What is that fixed cost? 40,000. The next point is desired profit. Desired profit means how much profit we want to attain. What is our desire about the profit? We want to attain 50,000. So here fixed cost plus desired profit means 40,000 plus 50,000 divided by PV ratio. What is the PV ratio? That one we already calculated 40 divided by 100. So now it comes to 2,25,000. If you are selling 2,25,000, then you will be able to earn a profit of 50,000. Next question, it is also so simple, but first when you are looking at the problem you will feel it is little bit difficult, but actually it is simple. So here fixed cost is 16,000, break-even sales in unit 8,000, sales 14,000 units, selling price per unit 20. So they are asked to calculate variable cost, profit. So how we can calculate these items? Break-even sales in rupee means 8,000 is the unit. 8,000 unit, if you are producing 8,000 unit, then you will be able to attain your break-even sales. Break-even sales means what is that level? Where we have no profit, no loss. So here 8,000 is the unit and 20 is the price. So how much will be your break-even sales in rupee? That is 1,60,000. Then we have to calculate the variable cost. So if they are asked to calculate variable cost at the level of break-even point, we can assume or we can ensure one thing: in break-even level there is no profit or no loss. That means profit will be zero. Profit and loss is equal or profit will be zero. So here break-even sales is, as you know, 1,60,000 is the break-even sales. Then less variable cost. We don't know what is the variable cost, but we just know about contribution amount and fixed cost. So profit we know it is zero because we are asked to calculate variable cost at the time of break-even sales. So profit will be 16,000. Okay. So what will be the contribution? If you want to calculate contribution when it is given fixed cost and profit, it is very easy to calculate because you can just add fixed cost and profit, then definitely it will give the answer to a contribution. So contribution is 16,000. Break-even sales is 1,60,000. So just deduct break-even sales. Sorry, just deduct contribution from your break-even sales. Then you will get answer for variable cost. Profit when sales are 14,000 units. So sales is equal to 14,000 into 20. That means now your sales is 2,80,000. Your variable cost 2,52,000. Then contribution 28,000. Fixed cost as you know 16,000. So profit is 12,000. Next problem you just read and work out. Next one also solution I already given in this PPT. So just read and work out. This one do it yourself. You can use the formulas. You can look into the previous problems. Then do it yourself. Okay, thank you.